Nvidia stock, ticker symbol NVDA. This stock is down roughly 44% year to date, and Nvidia just released the earnings yesterday. The stock went up around 5% yesterday during the open market hours, but after earnings were released, the stock went down almost 7% after hours. Did investors expect higher growth, or is there a weak outlook? In this video, I'll show you everything you need to know about Nvidia. I will quickly discuss the quarterly results and I will show you my fundamental analysis to see if Nvidia stock is a buy or not. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. Please subscribe to join the community and to receive multiple analyses every week, where I will tell you everything you need to know about the stock market. So, what does Nvidia do? Nvidia Corporation creates the graphic processing unit, or also called GPU, and gets the vast majority of its revenue from these specialized chips. It's rapidly expanding into fields such as AI. Nvidia designs and sells GPUs for gaming, cryptocurrency mining and professional applications, as well as chip systems used in vehicles, robotics and other tools. In the most recent earnings report, we see the revenue breakdown of Nvidia. There are two big segments representing almost 90% of the total revenue combined: gaming and data center. Gaming is their second biggest segment with a 43% revenue share. Data center is the biggest segment with 45% revenue share. Both segments are growing in high amounts in revenue each quarter. Next to that, we have professional visualization with 7% revenue share, and the last two segments are auto with 2% revenue share and other with also 2% revenue share. The two biggest segments, gaming and data center, are the only segments which are currently growing versus the previous quarter. One of the reasons why this stock is down is because of the disappointing net income and EPS, which is something that we could expect. So for me, it doesn't seem to be the real reason why people are selling this stock. Net income is down 46% versus last quarter and down 15% year over year same quarter. Of course, it's the same with the EPS, but as I said, this was something that we all could expect. The real reason is the weaker outlook for the next quarter. Nvidia sees a revenue of 8.1 billion after a 500 million reduction relating to Russia and the COVID lockdowns in China. Wall Street consensus had called for a 8.5 billion. This is what people got scared. And this is something that could be a thing in the coming quarters. But in my opinion, this is something that we all should have seen coming. A thing that I really like to see is that the company bought back 2 billion of stock. But more on that later in this video. And with the stock going down right now, I think we are seeing an overreaction. But let's check the historical stock price to see what's happening in the recent periods. I decided to include the S&P 500, TSM, EFGO and AMD, the major competitors of Nvidia. We see that on the 5-year chart, Nvidia is up almost 400%, while the S&P 500 is only up 64%. So you easily beat the S&P 500 with owning Nvidia in the past 5 years. All other stocks are up more than the S&P 500, with AMD being up 740% over the past 5 years. On the 1-year chart, we see that Nvidia is up 8.5%, while the S&P is down 5%. TSM is down 20% and both FGO and EMD are up more than 15%. On the 1-month chart, we see that Nvidia is down almost 50%, while the S&P 500 is only down 7%. TSM and AFGO are also down, and AMD is the only one being up with 2%. Year to date, Nvidia is down 44%, and with the recent earnings in mind, I think it's the perfect time to check the fundamentals to see if they are a buy right now. Nvidia is a 480 billion market cap company, which makes them one of the bigger tech companies in the US based on market cap. Right now, PE ratio is sitting at 43 and the forward PE ratio is sitting at 29. In my opinion, this is too high. I agree with everybody that you want to pay a premium for a stock like Nvidia, but at these valuations, I don't think it's justified. Most recently, the PE ratio is going down, and that's because stock price is falling and earnings are going up. So in my opinion, that's the best thing that could happen for Nvidia right now. I think you want to pay a premium PE ratio for Nvidia between 25 and maybe 30. So this means this stock is overvalued and that earnings have to go up or the stock price has to come down. A thing that I do like about Nvidia is the profit margin. Right now, operating margin is sitting at 37% and profit margin is sitting at 36%. Over time, the margin is increasing, nice and steady, which is a good thing in my opinion. Return on assets and return on equity are also quite high, which is a good thing. Return on invested capital is also looking really good. You want these four numbers to be above 10% and they are doing a great job, I think. The 12th trailing month revenue is sitting at almost 27 billion and the revenue is up 52% year over year. When checking the historical revenue growth, we see that it's going up quite nice and steady, especially since 2019. The revenue went up big time ever since. I think with the demand of chips being this high, revenue will go up even more. So that's a good thing. Nvidia has a future-proof business, quite obviously. When we check the balance sheet, we see that Nvidia has a total cash of 21 billion and a total debt of almost 12 billion. They have enough cash to pay down all their debt and even have some cash left to do acquisitions, buy back shares, pay dividends and all other things. This is why it's really important to have an increasing free cash flow. And that's something Nvidia does really well. Free cash flow is growing in high amounts, which is a good thing. A thing that I don't like about this company are the shares outstanding and the share buybacks. Nvidia has issued 12.6% new shares in the past 5 years, which means your shares become less valuable each time they issue new shares. I think they need to stop issuing more shares and buy back the shares outstanding. In this way they create more value for the investor and EPS will go up, which attracts other investors of course. On the other hand, with the stock trading for a premium stock price, you want to think twice before buying back shares. So maybe they are waiting for the stock price to fall down a little bit more and then buy back shares in big amounts. We will see what is going to happen in the coming quarters and years. From shares outstanding, it's a small step to the dividends. And to be honest, the dividends of Nvidia are a joke to me. Dividend yield is sitting at 0.1% and payout ratio is sitting at 3.6%. I would rather love to see this money to put in the share buybacks, but that's just my opinion. I don't think a lot of people like the dividends of Nvidia. My final conclusion is that Nvidia is a great company with a future-proof business. With the demand being this high for chips and to see the revenue hit record highs each quarter, I think you can't deny the fact that you want to pay a premium for the stock. But to be honest, I don't think Nvidia is worth a PE ratio of 40. I'm waiting for the PE ratio to be between 25 and 30. In the meantime, I'm waiting for the business to improve and the stock price to come down even more. But aside from valuations and shares outstanding, I think this is one of the better and interesting companies out there. So I'm definitely putting them on my watch list and when valuation is right, I might buy the stock. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.